This week, the Australian dollar traded from 75.25 to around 77 cents, the highest since November. It had been trading in a half-cent range over the past week before jumping on trade data. On Thursday, the trade balance release showed a record surplus of $3.5 billion, coming after a $2 billion surplus in November. It was driven by another jump in export earnings, especially in metals, coal and gold. This is a sharp swing from the $3 billion deficit we saw in June. The Aussie rose 0.5% in response and then continued to gain. We now expect net exports to add 0.1 percentage points to fourth quarter GDP. This comes after a small subtraction in the third quarter. The Federal Reserve kept rates on hold at 0.5 to 0.75%, as fully expected. There was little fresh news in the statement. Risks are still roughly balanced. Activity should expand at a moderate pace, which warrants only gradual increases in rates. There were a few clues that the Fed is looking to hike in March, which saw the US dollar soften. Markets are pricing in one full hike by June and two by December. Focus also remained on US politics. The US dollar fell to multi-week lows against some of the major currencies as Navarro, Trump's top trade advisor, said that Germany was using a grossly undervalued euro to exploit the US and other EU members. Trump himself also said that China and Japan were devaluing their currencies to boost trade to the US. Targeting bilateral trade deficits means escalating trade tensions, as well as the desire for a weaker US dollar. This is in contrast to the positive growth and deregulation story the US dollar had been pricing in since Trump's election. FX and equity markets were also nervous, as large corporates joined tech companies in opposing Trump's executive order on immigration. In the week ahead, we have the RBA policy decision, as well as the quarterly statement on monetary policy. We expect the bank to be reserved on the commodity rally, but the bank should remain comfortably on hold and release a neutral statement. Markets are pricing in a 15% chance of a cut this year. We will also get an update on December and Q4 retail sales. This will give us a better handle on the consumer spending portion of GDP. It should show a bounce back from the contraction in the third quarter. Commodity prices should remain supportive of the Australian dollar. The RBA is unlikely to move, while the US dollar should stabilize as the Fed raises rates 2 or maybe 3 times this year. In the week ahead, we expect the Aussie to trade between 75.75 to around 77.25. We'll speak to you next week.